Hello and welcome to Big Deal. I'm Nisha Poddar. Now, startups are in focus on the show today as Mamaearth listing really lifts the confidence in the startup space for value unlocking and also investor exits. So what are the various options as funding winter really continues, and what's the ground reality on deals for the startups? Let's find out from the experts. Karan Sharma from Avendus Capital, Disha Singh from Zouk, and Rahul Chowdhri from Stellaris Venture Partners are here on the show with me. Lady and gentlemen, thank you so much for joining us right here on CNBC TV18. Now, my first question to you, Rahul, of course, many congratulations. You had a great exit, partial exit in your portfolio company, Mamaearth, through an IPO, and this has lifted the confidence. What has been the impact, you think, of this IPO on the overall investor sentiment?
So, first of all, thanks, Nisha, for your wishes. In terms of IPO, I would say this has been, over the last 2 years, there has been no IPO that from a company that was VC funded. So people were eagerly awaiting as to, how this IPO goes. And clearly, if you look at the quality of institutional investors they attracted, it has been a very successful IPO in that sense. And it does give confidence to other late stage or late stage companies on how to build for the public market. Clearly, people want to see size, scale, growth, but investors in India at least would also want to see profitability as a matrix. And in that sense, this IPO is a kind of a culmination of both of those factors.
Okay, so Rahul, definitely it's also a culmination of many factors, as you said. But, one aspect that everybody has been harping on has been the valuations coming in from the startup space, especially in the IPO market. And we did see the value of, Mamaearth after listing take a huge drop, and now it's on path to recovery. Have we got the right mix of valuation metrics for this space, in your view, for any future IPOs coming in from the portfolio companies and from this space? As an investor, and giving a big picture view on this space, what do you think? Especially also pointing out one important aspect, that the retail investors have not been as exuberant in these IPOs as yet. Is that also a worry?
I would not say it's a worry, although I would also say that what this IPO says is that most of the institutional investors want to see profitability. And the valuation that you get is maybe 18 to 24 months forward multiple on your profitability. And that is what I think Mamaearth is getting. In terms of retail investors, again, hard for me to comment. We are not public market investors. But I would say, it's, again, when they start seeing company deliver performance on a consistent basis, hopefully that also starts playing into investors' mind.
All right. Thanks, Rahul, for taking all the tough questions on the behalf of the entire fraternity of venture capitalists and startup IPOs. Let's take that question to Karan. Karan, you have seen a plethora of deals and startups from in different, curves of their life cycle, as well as in different options when it comes to value unlocking, investor entry, as well as exit. How do you see the present situation, and do you think that more IPOs are in the pipeline?
Thanks, Nisha. Nisha, we see that, it's not that it's going to be floodgates open for the IPO market. I would say IPO is a key milestone that a company thinks about. It's not the end outcome. We expect on the tech side, maybe a dozen odd IPOs in the next 12 to 15 months. And a key reason for that is we believe a lot of companies are now getting ready where they can be appreciated well by public market investors, and where they have the governance, the frameworks, and the stage of maturity of the business models that can also be widely recognized by the wider set of public retail investors. Companies are turning profitable. They are demonstrating, corporate level EBITDA profitability, which has always been a key factor for public listings in India. So I would say it's coming of age for the entire industry, and we believe companies are now getting ready where they could explore their public market phases. So there's one aspect that we're seeing in terms of the market where a dozen odd companies, today we see around 30, 35 unicorns already profitable. So I expect at least a dozen of them to tap the public markets in their own respective journeys to solve specific requirements in the next 12 to 15 months. And on the other hand, we have also seen over the last 2 to 3 years, good secondary liquidity, which has been generated in the market to, deliver returns to investors, send money back to LPs. So you've seen around, around $8 to $10 billion worth of secondaries in the last 3 odd years, which always, eases up the pressure on the companies to provide exits through IPOs. So it's a good combination of potential public listing as business models evolve towards profitability, along with secondary exits. M&As continue to be on the sort of a lower trend in recent times.
That's right. So that's a good overview and a very balanced approach that you have given, Karan. Of course, the market has matured, there is understanding, but doesn't mean that the floodgates have opened for the IPOs from this particular space. There will be cherry picking from the investors' point of view, and getting back the retail investors' confidence probably will take a little more time because of the burn that they have seen in the last season where a lot of lessons were learned. But taking it to one founder from Zouk, Disha, thanks for joining us on this discussion. Wanted to get a founder view from this particular space. How do you view the present optionalities for the exits of investors? And is IPO market is one of the key drivers also? Because when investors come in, they're coming with the sole purpose of return matrices at the time of exit. Let's be very clear about that.
Sure. So, Nisha, first of all, thank you for having me, right? Of course, I think IPO is 100% one of the exit optionality. In fact, our investors, so Rahul is one of them, is here as well, right? I think they have been the biggest supporter and helped us dare to think about it. Rahul has closely seen Honasa's journey from early stage to IPO. We also have other investors like Titan Capital and Rishabh Mariwala who have also seen that journey. In fact, another interesting thing that we did was to convince a lot of exciting large consumer brands, founders like Mamaearth, Sugar, Wow, Beardo, to name a few, on our cap table. And they all are folks who have dreamed big and built massively loved businesses in a very short span of time. In fact, we were Varun's first angel investment. So overall, I think they all are very aspirational for us, and most importantly, all of them collectively want us to build the right kind of business that can run for decades. And of course, IPO, it will be another milestone in that journey.
All right, IPO definitely on the radar of the investor, especially when they are making the investment also as one of the exit options. So Rahul, of course, Zouk is a portfolio company. You want to begin by what you saw in this particular company while investing, and what is your focus on the portfolio companies now that you make new investments in a changed environment currently?
So first of all, Zouk was a very unique brand when we invested, I think more than 2 years back. It was a smaller company at that time. What we really liked was how founders were thinking about the brand and the connect they had found with the consumers. So this is a very unique brand in the sense that the designs or the formats are all Western, but the looks are all Indian. And that's what a young Indian woman is looking for today, be it bags, be it shoes, travel, and so on. And that's what we felt that this is a brand that can grow into multiple categories, and that's why we invested in them. We continue to stay very positive on new age consumer brands, and we have made few other investments there. Beyond brands, as a fund, we are a very broad-based fund. So we have made few investments around generative AI. Recently, we announced a company called Dashtune, which is in the consumer space but uses generative AI at the backend. Quite positive on the EV as a space. We invested in a company called Turno, which is in financing of commercial EV vehicles. Fintech, sustainability, we recently invested in a company called Circla, which is building sustainable packaging solutions for global markets. So quite broad-based, and at least as an investor, our thinking is, what is it in the company or the value proposition that can become a very large outcome in, let's say, 7 to 10 years. That's the horizon we take, and that's how we make and choose our thesis and areas of investing as well.
Right. And when we talk about the investor sentiment, of course, funding winter really continues right now. Karan, where are we in that particular space? Like, is there now a little bit of green shoots visible, or are we continuing to see a funding winter which is going to be prolonged?
Sure. So Nisha, the funding window was largely, I would say, the two key factors. One is we saw a big funding frenzy where we saw the last, 2 years, FY 22, 23, we saw almost $60 billion being raised by the industry over 2 years. So which meant that a lot of companies were capitalized. I think they managed their dilutions well at rich valuation multiples. So it was a no interest, low interest kind of a era of fundraising, which meant that obviously there had to be a pause from just a demand perspective of companies looking to raise further capital. And then obviously with the kind of a macroeconomic cycles, we saw massive decline in fundraising in the last, I would say this current year, where it is just about, I would say, $8 billion on the tech side as compared to $20 billion in a year before and almost 40 odd billion dollars the year prior to that. So yes, we are seeing that kind of a crunch. At the same time, we are seeing investors, especially private equity, sovereign funds, pension funds, continue to be active. They're looking this as a good opportunity to evaluate companies, take their own sweet time to do their diligences, build the conviction on the business models, and come in. We're seeing that that level of activity from these kind of funds. The funds that we're not seeing as active in this phase are really the crossover funds and the hedge funds. I think they have taken a bit of a pause given how the overall market view is. However, I do see some of this trend reversing. We are seeing that momentum getting built in, and a banker's bullish view, I would say. I expect the next 12 months to start reversing the trend, and maybe FY22 is an outlier, but yeah, we have to see this in 4 to 5 year phases, and I believe the next 5 years look far more promising than the previous 5. And India as a market certainly is going to be a big beneficiary of private equity and venture capital as an investment destination.
Right. So two important takeaways from you, Karan, from the deal street and the funding street. First of all, very, very positive view coming in for the next 5 years in this particular space, and likely pick up in funding activity in the next 12 months. That's good view coming in. But hold on to your thoughts, ladies and gentlemen, because we'll take a quick break and we'll talk more about the value unlocking proposition, the optionalities and fundraising in the startup space right after this short break on Big Deal. Stay tuned.